Hello everyone, welcome to the Ichimoku.co daily FX market review for the trading day ending Tuesday, November 17th. Firstly to the Euro US dollar, and here we see a continuation of the trend to the downside for today's trading, and we've seen a series of black body candles over the last 3 days. This suggests that the sellers have renewed that strong downside momentum that we've seen coming in after this market has attempted to rally, and this market has formed a series of lower peaks and lower troughs, and suggesting we have a very strong downtrend in terms of the second term time frame determined by peaks and troughs. The sellers continuing with strong control and breaching through the important support area at 106.63. This bearish breakout suggests that we certainly could see further downside here, and a possibility of the market testing down to 105.21 support. We do have a bearish market in all three timeframes in terms of Ichimoku, and on several occasions the Tenkan-sen, as we would expect, holding a strong resistance on these rallies, or very close to the Tenkan-sen. This should be no different in the near future if we do see the market attempt to rally. One problem here for the sellers is that the market is looking a little overextended in the depth away from the Ichimoku cloud. So sooner or later we are likely to get something of a decent rally with the market attempting to find equilibrium. But as we move past probably next week, we notice that the cloud actually moves lower. So that may alleviate the potential for the market to significantly retrace. In terms of the Chica span as well, the Chica span is a long way away from price action, and suggesting we have very strong downside momentum that is looking a little over extreme. But at the moment there's no hint here that we are going to see a major pullback, with the sellers continuing with strong control. And looking at the bands here with Euro US dollar, and we see the market continuing to trade down below that lower band, highlighting the very strong tone to this negative medium-term time frame trend. The market rallying on occasion and finding resistance around the lower band, and 3 days ago we saw something similar, strong price rejection over the last couple of days. If we do see the market attempt to rally, watching the lower band at 107.22 to continue to hold as resistance. And to the hourly charts, and here we see the market continuing to trade down below the Ichimoku cloud, trading down through the Kijun-sen indicator as well for the past couple of days. The Kijun-sen holding as resistance on occasion, and moving forward, that and the cloud are going to be our benchmarks and determine the direction of our overall trades on the hourly charts. So obviously, with the market being bearish in the longer term and medium term time frames, we should be looking to going short, certainly not going long unless we're talking about very short term trading. Now for today's price action, the market opened down below both the Kijun-sen, the Tenkan-sen and the Ichimoku cloud, and we have closed down below each of those indicators as well, finding support around the first pivot point support level, then trading just through there, not reaching the second, and a rally found resistance around that first pivot point support level, and with the Tenkan-sen trading around there, it did strengthen the resistance in that area. In terms of today's trading, as I've mentioned, we have opened and the previous session has closed down below each of the Ichimoku indicators, and any attempted rally may find resistance around the middle pivot point level around 106.57. And with the Tenkan-sen and the Kijun-sen trading around that area, we are likely to find some very strong resistance around there. There's a very good likelihood of the market at least testing to the first pivot point support level at 106.21, and then a very strong chance of a test down to the second around 105.96. Any rally through the Kijun-sen and the middle pivot point level could easily see the first pivot point resistance level tested 106.82, and the second pivot point resistance level will be very significant as it trades within the Ichimoku cloud for most of the trading day. Moving to the US dollar, Japanese yen, and for today's trading, we have seen some follow through following the strong bullish candle of the previous day's trading, finding support that day at the Tenkan-sen indicator, as we'd expect when we have a very strong uptrending market in all three timeframes. That candle saw a strong bullish breakout above the 123 level of resistance. The follow through today, though, hasn't been quite as dynamic as that previous day. We have seen formation of a much smaller body candle, suggesting that even though the net momentum is still to the upside, it certainly isn't anywhere near the strength that we saw for the previous day. Now, that previous day, however, was something of an extreme candle. We don't tend to see a strong follow through off these extreme candles. Importantly, however, we haven't seen the sellers lose control for the day, and that's the buyers lose control for the day, and that's very, very important that the buyers are continuing with control. And there still is a possibility of a breach up through this swing high at roughly about the 123.60 level, and that is going to be an important benchmark moving forward. And a solid bullish breakout up above that area could eventually see the market trading up to the 124.47 level of previous support and resistance. Now, if we do see any selling coming into this market, we should be watching this 123 level, previous resistance level, to act as support. And if we do breach down through there, I suggest that the Tenkan-sen trading at 122.62 is likely to hold as a very, very solid support. And looking to our hourly charts, and here we saw the market continue with fairly strong price action up above the Ichimoku cloud for the whole day for today's session. The market just testing down through the Tenkan-sen, but failing to develop further down through there. A bearish breakout, didn't see any strong bearish follow through, and the market found solid support around the Kijun-sen indicator on a couple of occasions towards the end of the day. The buying here was solid enough to maintain well up above the middle pivot point level, but unable to reach the first pivot point resistance level. At the moment, we have opened above each of the Ichimoku indicators and the middle pivot point level. The first pivot point resistance level is quite close, 123.55, suggesting we could easily test to there, and also to the second around roughly 123.68. Even potential for the market to test to the third pivot point resistance level around 124 is a possibility. With the Kijun-sen and the Tenkan-sen trading around the middle pivot point level, it does strengthen the support around that area, and that's roughly around that 123.36 region. But if they're breached in a bearish manner, we'll be watching the first pivot point support level 123.22, and then the second around 123 to act as very strong support. Next to the Aussie dollar, US dollar, and here for the second consecutive trading day, we've seen the market trading outside of the Ichimoku cloud, technically giving us a bearish market in the longer term time frame as well as the medium term time frame by trading below the Kijun-sen. The problem here for the sellers is that we've seen formation of another spinning top type candle, so indecision in the markets, and a small moderate amount of control by the sellers for the previous day, and the buyers have taken control here today, but only in a moderate way, suggesting not a lot of strength from either party. Important for today's trading, however, the market is closed up above the Tenkan-sen, and that suggests that we now may see the market transitioning into a bullish phase in the short-term time frame, and could see the market attempt to rally to higher levels. The Tenkan-sen today is held as support, whereas it held as resistance for the previous day's trading. So any upside could see the market test up through to this previous resistance around the 71.50 level. If we are going to see the market sell off in line with being a bearish market in the longer term time frame and the medium term time frame, we will need to close in a bearish manner down below the Tenkan-sen, and if we do that, we are likely to find some strong support coming in at the 70.63 level, which was previous resistance. And looking to the band chart with the Aussie dollar US dollar, and here previously we saw the bearish breakout down below the lower band, a lack of follow through, then saw the market rally to within the bands, and for the fourth consecutive day we've seen the middle of the bands holding as resistance, and for the second consecutive day the area just around the bottom band holding as support. And this really does highlight the lack of strength of the sellers in this case, and a lack of strength from really either party at the moment. If we are going to see further downside, then we will need to breach down through the bottom band, trading at 70.69 in a bearish manner, and then see some strong bearish follow through. Any upside would need to see the market breach through the resistance around the middle of the bands at the moment, roughly about the 71.30 level. And just looking to the hourly charts with the Aussie dollar US dollar, and this really does highlight the indecision in this market in the longer term time frame on the hourly charts, with yesterday's session opening above the cloud and then closing below the cloud. For today we've opened below the cloud and then we've tested above the cloud, and trading just around the top of the cloud for the close of the session. So a lot of indecision in this market in all three time frames, not only the longer term time frame. At the moment we've opened within the cloud, so a neutral market in big picture terms, and we will be waiting for some decisive price action either above the cloud and the other Ichimoku indicators, or below the cloud, and we'd like to see either bullish action if it's to the upside, or bearish action. Possibility of the market testing at least to the first pivot point support level or the first pivot point resistance level. That resistance level is around 71.46 and the support level is around 70.80. Next to the Euro Japanese Yen, and here we've seen some selling in this market today, and that followed the breakout down below the 131.74 level of previous support. On that candle we saw a lower high and a lower low formed. We saw the Tenkan-sen holding as resistance, but we also saw 131.13 support coming into play, and the sellers losing commitment down below there. So off the back of the important support at 131.74 being breached, it wasn't on a bearish candle, and it was on a white body candle and a very indecisive candle. Today we've seen the market not extend the trend further to the downside, and we've seen the 131.74 level hold as resistance, as we saw for the previous day's trading, and the area very close to 131.13 holding as support. The formation of a black body candle here, however, suggests that we have seen in net terms the sellers return to the market, and this suggests that if they're strong enough we could see a breach down through 131.13, and that would be in line with the market being bearish in all three time frames by trading below the cloud, the Kijun-sen and the Tenkan-sen and the Chiká-span supporting the negative price action. So an opportunity here for the sellers if they're strong enough, but at the same time we should be watching 131.74 to continue to hold as resistance if we do see an attempt at any buying in this market. Next to the loonie, the US dollar Canadian dollar, and here we see the previous day price action trending to the upside and finding resistance at 133.50 level. We have seen a bullish breakout through the Ichimoku cloud, but you haven't seen any strong follow through. And even though these three candles here are forming a series of higher highs and higher lows, it's been on the back of some very indecisive trading, some very weak indecisive spinning top type candles. For today's trading, we've seen the sellers return to form a black body candle but failed to close the trend. They have closed with control, and it suggests the possibility of the market changing the trend, but looking to some strong support to come in at the 132.80 level, or at the Tenkan-sen indicator around 132.63 if we do see any selling in this market. So watching support initially at 132.80, but also watching resistance back up around this 133.50 level. If we do see the market break out through the 133.50 level in a bullish manner, we certainly could see further development to the upside, possibly testing up to the 134.54 level, and that would be in line with the market being bullish in all three timeframes in terms of Ichimoku, and supported by the Chiká-span being above the corresponding price action. Looking next to the Euro Aussie dollar, and here we see negative price action down below each of the Ichimoku indicators, highlighting a very strong negative bias in this market. A very strong negative candle following the market finding resistance the previous day around the Tenkan indicator. Sellers closing with control, showing some very strong commitment. Something of a minor swing low down around this level has been tested, and we've closed just around there, around 149.65, and we will need to breach down through there in a bearish manner if we are going to test down to the next swing low, down around 147.50. Any rally is likely to find strong resistance around the Tenkan indicator around 151.